Good morning, everyone. Welcome to our cbam webinar. Today, we're going to do a webinar on cbam cost exposure and how to calculate it. I'm Freddie. I'm a sustainability researcher here at CoolSet and spend my time working on a lot of EU regulations, including cbam, but also to name a few, EUDR, EUTR, CSRD, and many others in that area. And I'm joined with my colleague Elizabeth, who's also a sustainability researcher. And together we've put a lot of work into this webinar, and we've done a lot of research, and we're really excited to have you. We'll just let a couple more people join, but a couple of housekeeping things. You might notice that my mic looks like it's muted. It's not muted, and you should be able to hear us fine. But if there are any problems, just let us know in the chat down below. And also, if you have problems seeing us on the screen, if you click on the display button, which I believe is bottom right, you should be able to see us better. And yeah, we'll do the webinar. It's around 45 minutes. And at the end, as always, we'll have time for a live Q&A. So if you have any questions, feel free to pop those in the question section, and we'll get to those at the end. And then also there's a chat function if there are any kind of technical issues or you want to talk to each other throughout the webinar. But yeah, we'll get started. So an agenda for today. We'll give you a brief introduction to cbam and then situate it in the wider EU policy context. So see how it connects to what else is happening in the EU in regards to sustainability. Then we'll talk about how to implement cbam in practice. And then Elizabeth will talk you through default values and supplier emission data, so a bit more of the technical side. And then we'll look at how you can identify cost savings through your cbam reporting, so how that kind of works for your business and can be applied practically. And then, as I mentioned, we'll finish with a live Q&A. And some goals to outline for today. So I assume all of you here are interested in the cbam, so we'll talk you through the why, the what, the where, and the how. So giving you a bit more context and understanding. We'll be diving deeper into default values, their pros and cons, and supplier emissions data and how and when it's required in practice. You should leave with a better understanding of how better data can deliver real tangible cost savings and how you can bring that back to the boardroom or your company. And finally, how cbam reporting inputs into predictable and more auditable costs. So again, that kind of tangible business side. So to start off, cbam in a nutshell. What is cbam? It stands for the Carbon Border Adjustment Mechanism, and it's the EU system for applying a carbon price to particular imported goods. And it's aligned with the EU ETS, or emissions trading system, which already operates within the EU. So for context, the EU ETS is a carbon trading market within the EU, a cap and trade system, which requires companies to buy allowances for every ton of CO2 that they emit, and this price is set by the carbon market. And cbam requires anyone importing into the EU for particular goods, which I'll go on to do the same thing, essentially. So understanding the specific GHG emissions which are embedded in their goods, and then it requires you to report on those emissions using the EU ETS aligned methodology, and then pay for them via cbam certificates priced in line with the EU carbon market. So it's extending the EU ETS to those outside of the EU. And who is in scope? So I mentioned it applies to just a couple of products or sectors, and these are defined by CN codes in the regulation, but covers iron and steel, aluminium, cement, fertilizers, electricity, and hydrogen. And these are all particularly kind of heavy emitting industries, hence why they've been selected. And it applies to those importing for free circulation from non-EU countries, but also those that are not linked to the EU ETS. So there's a couple of exclusions. Firstly, it only applies to those importing over 50 tons per calendar year. And this excludes electricity and hydrogen, but for the rest, if your company imports over 50 tons, it applies, and if not, it doesn't. And those countries participating in the EU ETS or linked systems, so that includes, I think, Norway, Iceland, Liechtenstein, they're not in the EU, but they are part of kind of the linked system. cbam therefore doesn't apply. On to the next. Why CBAM was implemented in the first place? As I briefly touched upon, EU producers are already paying for their emissions under the EU ETS as part of kind of an EU attempt to reduce emissions and decarbonize, but the imported goods face no comparable costs. So this leads to a risk which experts call carbon leakage risk. And carbon leakage is essentially the risk that either EU-based companies might move their production abroad to a country where they won't have to pay such costs, or EU products will be replaced by more carbon-intensive imports, again, due to a lower market price. So CBAM's implemented to level the playing field and the price of goods and contribute to a wider decarbonisation regime. And how does it solve the problem? As I said, it's applying a carbon price to these imported goods based on their embedded GHGs. So it's leveling the playing field for products produced within the EU and already taxed by the EU ETS, but also from with those produced outside of the EU. And it's important to see that it's not meant to be a protectionist movement, but more that it's compliant with WTO, as products are treated based on their emissions rather than their origin. So it equally supports and kind of benefits those producing in a low emission setting, whether you're in the EU or without, because your costs will be lower. So it's not protectionist for the EU, but it's setting a global precedent for carbon pricing within trade. Before we kind of go on to the next part, we're going to do a poll just to understand where you're all at in your CBAM journey and what best describes why you joined today's webinar. Is your organization in scope for CBAM? Are you supporting others impacted by CBAM? Maybe you're an external supplier and you're preparing for upcoming CBAM obligations, or you're here to just build a more general understanding. And as I see the poll results coming in, about 40% of you here to just understand a little more about CBAM, and equally 40% are in scope for CBAM. A couple, maybe 20% supporting clients impacted by CBAM, and 5% preparing for upcoming CBAM obligations. A nice mix. So hopefully we can tailor this to all of you. And yeah, if you have any further questions, again, leave them in the question section down below. Next, we'll consider CBAM a bit more broadly and how it fits within the wider EU climate policy context. So CBAM isn't a standalone trade measure, but it's part of the European Green Deal, which is the EU's roadmap to climate neutrality by 2050. And it supports also the Fit for 55 package, which aims to reduce EU greenhouse gas emissions by 55% by 2030 based on 1990 levels. And yeah, CBAM is an important part of this. The EU ETS was kind of a crucial part of decarbonizing within Europe, and CBAM is now the mechanism that prevents this carbon leakage and ensures that we're maintaining on the track to reduce our emissions. And they're designed to work together to drive decarbonization within Europe, but also kind of set that global precedent for climate neutrality across the globe. And a bit more context or context behind the motives from a policy side. So Wopke Hoekstra, the European Commissioner for Climate, Net Zero and Clean Growth, gives a nice quote here to say that CBAM makes sure that there is a level playing field, that we're not asking for anything more or asking for anything less for those goods that come into the EU. And in doing so, we're rewarding investments in low carbon. So again, they're not protecting the EU, but they're rewarding anyone both within the EU and outside if they invest in low carbon production. And CBAM is seen as a climate instrument rather than a trade barrier. And for many of you that have followed our webinars or are following sustainability policy more widely, you will have heard about the omnibus and how that's been affecting a lot of climate policy within the EU quite significantly. And CBAM has also not escaped its wrath, but the simplifications are pretty clear here. And the two main ways that the omnibus wave has impacted CBAM are in a threshold. So there was previously a €150 low value exemption. And this has now been replaced by the 50 tons per year baseline. So previously, if you imported more than €150 worth of these relevant products, you were required to comply with CBAM, and now it's over 50 tons. And if you see on the right here, the scope is quite significant. So actually 90% of importers have been exempted by this change. But in terms of carbon, it's not significant at all because CBAM will still cover 99% of total CO2 emissions. So we can see that it's really simplified things for a lot of importers, single importers or SMEs, but in terms of climate impact, it's still significant. And the second simplification is that the first annual reporting was pushed back from May 2027 to September 2027, so giving people a little more time to prepare their annual reports, which I will discuss in the next section on timeline. And a little more on how the deregulation wave influenced CBAM is that while simplifications have happened at the higher scope, the EU are also planning to strengthen the regulation, and that they're noticing weaknesses and they're seeing where to improve them. So one of those particular areas is addressing downstream carbon leakage, particularly steel and aluminium, by adding more products into scope. Scrap metals is significant here, and we're seeing a lot of companies kind of changing the materials they use to avoid having to report under CBAM. So by adding more products to the scope, then hopefully the EU can avoid that and ensure that people are paying their dues. And also an addition of stronger anti-circumvention measures. So increasing traceability requirements and mapping to the source, again, trying to prevent people circumventing the rules and ensure that people are paying for their CBAM requirements. And finally, a temporary decarbonisation fund to support those EU producers who face significant carbon leakage risks. And another quote from Wopke Hoekstra is an example here is that the aim is to avoid, for an example, a washing machine production facility in Poland moving just outside of the EU because CBAM on metal makes the washing machine more expensive. We want to avoid this. So yeah, the aim of CBAM is not to have all EU industry move outside because it's cheaper, but level the playing field, ensure that all low carbon facilities are rewarded and those with higher carbon are encouraged to reduce their carbon emissions through a pricing mechanism. And in practice, how is this working? We can go onto a timeline here and see that CBAM entered into force in May 2023, so a couple of years already. And this is when the legal framework was established, but no reporting or payments were required yet. So it was from October of that year, there was a transitional period where quarterly CBAM reports were required. And this period was used to test methodologies, systems, and data availability. So maybe many of you here have already been through this transitional period, and could be nice if you share your experiences in the chat if there's lots of you who have experienced this. But from January the 1st, so a couple of weeks ago, the definitive phase began, and this is where CBAM came into action financially. So now it's the carbon cost obligation is there. And by 2027 September, this is when the first annual reports are required. So throughout 2026, you should be tracking and monitoring and getting that data from your suppliers, which we'll go on to later. But the first annual declarations aren't required until 2027. And then finally, 2034 is when full CBAM enforcement will be required. So this is when any free allocation, which again we'll go into, but that's essentially when you don't have to pay for certain sections because there's a free allocation, that'll be fully eliminated by 2034. So everyone and everything in the industry will require CBAM payments. And this phase-in period, what does this look like? So it's phasing gradually to mirror the phase out of free EU ETS allowances for EU producers. What this means is that currently free allowances exist to protect EU producers in sectors such as steel, cement, and aluminium from international competition. So every year, For example, an EU steel producer emitting 100 tons of CO2 might only have to buy 60 or 70 tons of CBAM allowances, but this free proportion is going to reduce, and consequently the share of emissions subject to CBAM certificates will increase. And the EU ETS is what defines how quickly this happens. And we can see on the next slide this phase-in period. So an example here, if the embedded emissions remain at 10,000 tons of CO2 emissions per year, and let's say for the example, this doesn't change between now and 2034, we can see at the moment you would only have to pay for 250 tons of those emissions. And in 2030, that would go up to 4,850. And then by 2034, you'd have to pay for 100%, and that's 10,000. So yeah, it's gradual, but also it's an incentive to keep reducing your emissions as the time goes on. And a few practical implementation steps here. Step one, suppliers measure your emissions. So that's really important to get your data from, is that your non-EU producers are able to calculate the embedded emissions at installation level. So that's particularly the production facility rather than just their whole company emissions. And this is required using the cbam methodology. Default values, which Elizabeth will talk through next, but these values where that data is not available can be applied only when data is missing and you really have tried to gain that with a lot of effort. And then importers, so those importing into the EU, collect and validate this data from their suppliers. They make sure it's of high quality and they calculate the emissions. And then these emissions are reported annually. So that's the 2027 September report for 2026 data. So you have 9 months to kind of get all your data from the previous year together and report on it. And finally, you purchase CBAM certificates and in line with the amount of emissions you're importing. Great. Now I'm going to pass on to Elizabeth, who will give us a better understanding of EU default values and their characteristics.
Nice. Thank you very much, Freddie. First of all, before I start, because we have this a lot, can you please confirm in the chat that you can hear me well, so that then we can move on without losing any important information? Amazing. Thank you very much for this. So yeah, indeed, let's first take a step back and understand what the default values actually are. So essentially, the default values are emission intensities, which are defined by the EU and specifically by the CBAM regulation, and they are a fallback option, which you can use only when installation level supplier-specific emission data is missing and cannot be retrieved, at least in a reliable way. And there were two different default value regimes. During the traditional period, we had one where the default values were based on some assumptions, of course, and they were designed mainly to help people kick off their reporting. And now, as we move on to the definitive phase, the values that the EU has published are more structured. They are defined per country and per product, and they are a bit of a more mature version of the transitional period one. But what is important to mention here is that the default values are meant to be used only when the actual emission data cannot be retrieved. And it's not just one alternative calculation method for you. And also it's important to mention, and I think we had some questions for it as well, that the default values do not exist for electricity, and at least for now. And electricity always requires the actual data from the installation that it was produced. And one interesting point on default values on a first glance is that they're not designed to represent any sort of realistic average value of these installations. We have noticed that there are specific reports that already mention that using default values could lead to even 30 to 60% higher emissions than using their actual data. So now let's see how these default values came to be. First of all, they are legally defined in Annex 4 of the regulation if you want to see them. And you can also find the latest updated annex in the guidance documents of the CBAM page. And just to mention that these are publicly available but not finalized, but the EU has already published them so that people can already take a look at them and start using. In any case, the EU has used specific data sets, which are either coming from the Joint Research Center of the Commission, or in case there were no specific data, country-specific data available, then they have used average emissions of the 10 highest emitting exporting countries. What is important to understand here is that this is not deriving from any best practice plans. It excludes any sort of efficiencies or technology choices that your particular suppliers might have in place, and essentially they don't reward cleaner installations. On top of that, also the EU has added specific markups, as they call them, to the default values. And essentially what they are is that they are an additional buffer percentage to the default value, and it is designed to avoid the underreporting of specific installations. They assume that because an installation does not have verifiable data, they are statistically more likely also to have essentially higher emissions than the average. And for indirect emissions, also we see that they use more conservative electricity emission factors. So even in case you, for example, use renewables for electricity, I mean, not you, but your suppliers essentially, then this will not be reflected in the data. And all of this is intentional. And the idea is that we keep this setup safe and with these conservative fallbacks, essentially. Now, how can you use the default values? And essentially the main principle is that you have to use it only when you have done everything in your power to find the actual data, and that's not possible. Or potentially you might lead to the conclusion that it's unreliable data that your suppliers gave to you. During the transitional period, there was this 20% of total embedded emissions cap, and this was meant to balance out at the beginning how much of the reporting was through default values and how much was with actual data. But during the definitive phase, this logic changes, and there is no cap on how much you can use them, but that's not because the default values are free to be used, but because their usage is not the default, like should not happen in an ideal scenario at all. And one change is that now we also have the default values per product and per country, of course. Let's move on, and we will see now here a table that summarizes the differences between the transitional and definitive phase. We see that in the transitional period, the default values were adding as a flexibility with this cap, and then from 2026, this changes. It's only like the last resort exception. We also see that the level in which they are applied is more specific, and we also see that one thing that these two have in common is that regardless of if you're in the transitional or definitive phases, we have this expectation that you declare if you have used any default values and the reasons why essentially you couldn't obtain the actual data. Now, it is important to mention what default values are, and they are not built to have a future-proof way for you to keep doing your reporting essentially on cbam. By design, these values are made to overestimate your emissions, so using them long-term potentially will lead to higher costs for you. You start with a higher essentially emissions baseline, and to add on top of this higher baseline, we have the markups that we talked about, which will keep increasing, and we can see on the right side of the slide that this is just a screenshot from the values, actually from the default values, that shows that in 2026 we're going to have a 10% markup, but as we move forward in time, this markup will keep increasing. So the more you keep using your default values, essentially the more you're going to have like increased costs because of the default values. Here it's just an example to see how the default values annex looks like, and we have per country one table where we have all the CN codes, if available, of course, with the default values broken down to direct and indirect emissions and the markups included. The previous, there we see exactly how the values look like, but what is the cost impact of using these values? Essentially the same product, as we said, with same volumes. At the beginning, we mentioned that it could have 30 to 60% higher emissions. in many cases, supplier-specific data could significantly lower your emissions. And right now, with the use of the default values, we are covering the worst-case scenarios. When you combine that with the overestimation of the fact that the ETS free allocation is shrinking over time, the cost impact is also getting more and more substantial. And if your volumes stay stable, the CBAM costs increase. So we're going to talk in the next section about how you can manage that cost. But before we do so, let's move on with one more poll, which is for 2026 CBAM calculations, what emission data are you expecting to use? Are you going to be using default values? Are you going to use specific data mostly, a mix of both? Or you haven't checked already what you can assess. So let's see what is happening in our audience today. For now, the vast majority is still not sure what they're gonna use, and they still have to assess, which I guess makes sense. But let me point out that we're already in the definitive phase. So I think that's a decision that you have to make as quickly as possible. And then the second biggest section is going to use a mix of both, which makes sense. And I think what we would suggest is that you start with what you have, and then you can already transition year by year to more actual data. Thank you very much for your answers to this poll. So now I'm going to move on with what are the data that you need essentially in order to replace these default values. What does it take in order to replace this? The first is you need installation level data. Essentially, you need to see what's happening in the factory, what's happening in the production site, and you need to collect specific data on the emissions of that installation. Emissions are also calculated within specific CBAM defined boundaries. So part of the information that you're going to get is which production processes, which machines are used, and how this impacts the calculations. And essentially, the overview of this baseline information will lead to two critical numbers. The first being the direct specific embedded emissions, and this is the emissions intensity of the product itself. And also you're gonna get from your suppliers the indirect specific embedded emissions, which captures the emissions for electricity used in production. And I think we had a couple of questions in the Q&A section for this, so I hope we cover it through this slide. And last but not least, you need to map your imported goods to the goods that you get from your suppliers, and this will ensure traceability and that you're not essentially contributing to carbon leakage. So now let's see the process of collecting this data. So first you have to identify your suppliers and the relevant installation. So you need to understand which factory contributes to which of your products. And once this is clear, you need to set the production boundaries. There is a whole specific methodology in CBAM on how you can define the boundaries, and this is a very, very important part of doing so. And once that's there, then you can move on with collecting the data emissions from your suppliers. And one interesting thing to point out here is that there is an EU communication template that we see that many suppliers are using, which can help you standardize how you take these emissions in-house. And then last but not least, you need to always be receiving a third-party verification document from your supplier that they have done everything and they have gotten this check mark that everything is actually credible. But there are a lot of changes in collecting this data. So first of all, there is a fundamental difference between collecting data for carbon reporting versus data collection for CBAM. General carbon reporting usually uses the corporate averages using the emission factors that we can find in databases. But for CBAM, you need the actual activity data from that installation. So it's not enough if your supplier gives you the same emission factor that you can find online. You need to have something that is specifically linked to the products and the volumes and the factory in which the materials are produced. Also, even the different production routes and processes will play a role on how this number is formed at the end. And that's why it's very, very important to have everything in place and to understand the system boundaries for this. Of course, at the beginning, this will be very vague, but as we move on, it's good to know what good enough will look like as you mature in this reporting process. First of all, you need to confirm that the system boundaries are correctly applied. This will help you have very clear data and you can understand where they are coming from. Secondly, you need the actual activity data like fuel use, electricity consumption, the volumes. So you need to have a checklist where you can see, okay, I received this from my suppliers, and goes on. And third, you must have your own clear mapping between the imported goods and the installations, so that if you ever get audited, you can say, okay, I have done my traceability exercise. And finally, you need to have all the documentation stored and cross-checked. And this will make sure that you have an audit-ready system, essentially. Before we move on to the next section, we have one more poll for you, which is how are you planning to calculate the CBAM costs currently? Are you planning to use spreadsheets, internal tools, or maybe you're partnering with consultants or software, or you don't calculate yet, so you don't know? Yeah, then let's wait 1 second. And yeah, I think the biggest section of people are not calculating yet, which is understandable, but you really need to pick it up and start working on it. And the second biggest section is working with spreadsheets at this point, with also another 10% using internal tools and software. I think this shows that still there is not a lot of maturity in the field, and people are still figuring out what they will do as we move forward. And yeah, now we will move on to see what how data can help you save costs, essentially. What drives cost exposure? So it's important to understand what contributes to the costs getting higher. So the CBAM costs tend to increase when we import volumes, of course, that are high, and we increase the volumes, and that's something that we cannot do anything about when it comes to CBAM. But the second factor is also how carbon intensive these products are. So if you have a variety of products, some products will contribute more to your costs and some others less. And one more important point is the production technology that is used. So older installations that your suppliers might be using will emit more, and then modern, more low carbon processes will essentially translate to lower costs. Then, of course, the difference on if you're using default values or actual values, as it will definitely lead to lower emissions if you use actual emissions. And the last point is the free EU ETS allocation system, which is phasing out as the years go by. So considering all of this, when you decide where to invest your time and effort, you should prioritize suppliers where you can directly contribute to lowering the costs for them. So for example, you can focus more on suppliers that currently you're relying on default values for, or you could prioritize suppliers that you know you have high volume imports, so it makes sense that you have the most accurate data for this. And similarly, maybe you have suppliers that are producing the more emission-intensive goods, so then it makes sense that you understand more what's happening and how you can influence that cost. And last but not least, I would personally suggest to first invest in the long-term suppliers where you can get better quality of data and then see this paying off year after year. We have an example here just to show you very quickly how in practice, two suppliers could be prioritized differently. So if you see supplier A here delivers a more core CBAM material with higher emission intensity in large volumes, there are long-term contracts with it, and then essentially focusing on supplier A will probably lead to more recurring impact over multiple years, while at the same time supplier B has already lower emissions, it's a downstream product, it's not a well-used supplier, so maybe it does not make sense that you start with focusing with supplier B. Moving on to, I think what's the last point for today is, okay, now that we understand what are the default values, what influences the costs, how can we use our reporting in order to already predict what our cost exposure will be? I think what's the most important in this, and again, I know there are questions in the chat about this, is to understand how to calculate the CBAM costs, so then you can know what will influence that cost clearly. The baseline calculation, and of course that's an oversimplified version of it, is that the CBAM costs comes out of the emissions that you got from your suppliers. You got some emission factor which you multiplied with your volumes, of course. Then you multiply this with the price of the EU ETS system on that point in time. And then you also have to multiply it with the CBAM phasing factor, which will lower a bit the emissions that you have to pay essentially for. In case you paid already any taxes in another country, you also can deduct this. Essentially, you see how, like, I think it's a simple formula, and I think everything is clear and we already touched upon. But yeah, let us know in the chat if you have any more questions about each of these sections of the calculation. But what I wanted to spend more time on is to see, okay, how each one of these factors influences this cost. So first of all, the CBAM costs follow the EU ETS carbon market. So when the carbon price goes up, your CBAM costs will rise with it. Then each year after 2026, a larger share of your emissions will become payable. So the higher the share, the higher your costs. Then also your procurement choices matter, as sourcing from like more modern installations will lower your carbon. And another big driver is whether you're using the supplier data or default values. So the more you use default values, the higher your costs will be. And finally, everything, of course, scales with volume, but that's something that most probably you cannot impact in terms of CBAM. Now, to wrap up the session, here are some practical tips that we think matter when you're trying to achieve some predictable CBAM costs. So first, we have the procurement decisions that we talked a lot again and again. So who you source from will directly impact your CBAM exposure. By prioritizing these low emission installations or adding this as a point for procurement when setting new suppliers, you're already setting up yourself for lower and more stable costs probably. And related to that, these long-term sourcing relationships, I think, will make a big difference in the future, because when we have consistent relationship, we have consistent data, and therefore we have consistent CBAM costs that can be predicted beforehand. And then whenever possible, we really suggest that you use this actual emission data rather than the default values. It takes some effort, but it's worth it, since most probably you're going to lower your costs. And then there are two strategic levers that you can build into your planning. One is to actively monitor the price of the ETS. And then, yeah, by tracking the price, you're understanding the peaks, the lows, you understand when is the right time for you to purchase and how this will look like even if you purchase in the future. And similarly, plan your volumes proactively according to your costs as well. So if you have a budget on what your CBAM costs should be, by knowing what your volumes would be across 6 months or a Q or something, it can help you forecast what will be the cost of CBAM as well. Yeah, of course, this does not eliminate your costs, but it helps you turn your process into something you can forecast and manage actively and consciously without just, seeing at the end a surprising number. It's like, okay, that's how much you have to pay. Before we move on to our Q&A section, I have one last poll for you, which is, what's your biggest source of uncertainty right now when it comes to forecasting your costs? Is it the EU ETS price volatility, maybe your emission data because you're still using a lot of default values, the volumes of import, the free allocation phase out, or any sort of budget alignment internal? Yeah, I see there is a clear winner here with like 70%, I think, of you saying that the emission data, and especially the use of defaults versus supplier data, is your biggest source of uncertainty. And I think we could do even another webinar just for the explanation of how to collect this data. But yeah, I understand definitely the trend here. And just for your information, the second most common is the internal budget alignments, which I guess will play a role in the future discussions for budget. Thank you very much for participating in our polls as well. And now I will hand it back to Freddie for our live Q&A.
Nice, thank you. Yeah, really nice to see all the questions down below. And we have around 5 minutes, so we'll try to get through as many as possible, and feel free to upvote them. So you can vote on questions you are also interested in, and then we'll prioritize those ones. And also really nice to see you kind of helping each other in the chat. So keep answering each other's questions, and then the rest of the questions we'll get back to you on email. I will start with a question from Daniel. And 50 tons per calendar year. Does this mean that all GHG material imports need to be traced and expected planned yearly volumes are needed to proactively understand status against threshold and induce consecutive compliance actions? Yes, long story short, but it means that if you are importing any of these products covered by CBAM, you should be proactively checking and accounting for how many you're importing over a calendar year, because as soon as you cross that 50-ton threshold, you'll be required to comply with CBAM. And this is also not 50 tons per commodity, but it's 50 tons over all of the commodities. So 10 in aluminium and 41 in steel would mean you have to comply. So yeah, really important to have systems that are tracking these things, and meaning that also, if you can kind of predict if you're going to go over, then be more proactive in your compliance. Great. On to the next. Maybe I'll pass this one over to Elizabeth, if you feel good to answer that.
Yeah, definitely. Okay. Are you allowed to buy large quantities of certificates when the ETS reference prices are relatively low, to use when ETS prices are relatively high? Yeah. So essentially, what I do know that will happen is that from February 2027, you're going to be able to purchase certificates. Each certificate is 1 ton of CO2 emissions. You can choose when to buy them throughout the year, first of all. So yes, indeed, if you follow the price, then you can buy when the price is lower. And I actually see no reason why you wouldn't be able to buy more than what you need so that you can then compensate. But just I would leave like this one asterisk for us to cross-check. However, I do think that's possible, and that's something that I would personally propose to someone, at least to follow the price and buy when the price will be lowest. But yeah, interesting that you would consider buying already at a lower price.
Nice, thank you. Let's have a look down here. We have quite a few questions on verification, and this one from Sven. As we import from Asia, how do I know if the actual data is verified and correct? So that's something you have to organize when you're the importer. You have to verify the supplier data, and this can't just be internal or yourself, but you have to have an accredited verification body to support this. So I'm sure that there'll be a list somewhere, and we can see if we can help you out with that. Yeah, an accredited verification body will be doing that for you, and that's required on all supplier data. And I think while we're on the topic of verification, there was one here. Similar vein, who should do the verification? That's the accredited body. And there was also a question on default values, and those don't have to be verified. And you don't have to declare that you've used them, but just be aware that auditors could check. And if you've used them incorrectly, they'll default value. So verification only for supplier data, but use default values correctly if you are using those. Let's go on the next. Maybe Elizabeth can take this one.
Yeah, actually, if you're meaning the default values, there is, so if you click the cbam website of the EU Commission, it's, I think if you just write cbam EU Commission, it will be one of the first things that will come up. There is this orange button that says cbam guidance and documents, very like close to the beginning of the page. If you click on that, there is like a huge list of documents that were uploaded at the end of 2025. And one of these says annex to the default values. And that's where you can find it. But if not, please send us an email and we can send you the actual link.
Great, thank you. And let's do one more. We've got, if it isn't possible to retrieve supplier-specific emissions, do you have to prove that? And if so, how? And I think Elizabeth touched on this, and I can't remember the exact phrasing, but it's essentially to your best possible attempt. So you don't have to give any proof that you didn't try, but if an auditor is to come, you should have kind of evidence of trying your best and how you're going to iterate and do better in the future. But there's no document or something you have to submit to say you couldn't retrieve the specific emissions. And one more question, and then I think we'll wrap up. Let's see. Is there any you want to answer?
Yeah, there is actually this one about CBAM calculations, and I think maybe we can do that because I think many people will be interested. So I think what you're saying is that isn't the right CBAM calculation method CBAM cost equals CBAM certificate price, CBAM import weight? Okay, so let's break this down. So CBAM certificate price is the same as the weekly average of the EU ETS price. So in our formula, we had the EU ETS price because it's exactly the same, and it could give you an indication on where you can find it. And then you're saying CBAM import weight. Essentially, what it is the in ours we had, I think, emissions from that product. So how do you calculate this? You need to take the quantity, like the volume of the product, multiply it by the emission factor that your supplier gave you, or the emission factor that you got from the default values, and then also multiply it by the benchmark CBAM factor. So yeah, it's not exactly as you mentioned, like I wouldn't call it import weight, but this is the flow that you need to follow.
Great, thank you. I think that's out of time for today, but thank you everyone so much for joining. We will share the slides with you via email, and if you have any more questions, please feel free to reach out to either of us at frederica@coolset.com or elizabeth@coolset.com, and we'll try and get back with all the questions we weren't able to answer on email. So thank you so much. Have a great day.
Thank you very much.